And we are live, live, live. Good morning to everyone. Caught us off guard a little bit there. Sorry about that. Welcome to live stuff. That's what happens. Good morning to you, Vernon, and good morning to everybody who's watching us today on Behind the Markets. How are you doing, my brother?
I'm doing fantastic. Thank you. Good morning to you, Mtwale. Good morning to Lucky as well.
Good morning, Lucky. I know he's keeping us on our toes. That's how he does. Thank you very much to our never aging brother in the background, who I'm still convinced is giving us his football age. That's why he does. That's why he does sports coverage. I know that. We know it for a fact. Well, thank you very much to everybody who's joined us. Today is Enterprise Thursday. We're going to be going through a few things today. One is our usual market roundup. Then we're going to be going through our daily deep dive, where we will be touching on specifically catching up with the minister's interview from the IMF spring meetings. We've been waiting to see if there's been any changes there, of anything to look up to. Still nothing so far. While simultaneously, we'll be also going through our chart of the day, which has to do with growth data, and then we'll be going through then our topic of discussion. And this is the entrepreneurs who want to watch this one. You don't want to miss this one. It's actually quite interesting today. It will take you through mistakes from business and what we can learn from them, and also how to get through them, and just to anticipate some of them. So thank you very much to all of you. And we'll be talking about how to end that off, because remember, this week has been focused on the growth mindset. We've traveled through learning, we've traveled through resistance to change, and now we're traveling through learning from mistakes, coming back from and learning from mistakes. The importance of learning how mistakes are made, and what you should do in the events of them, and how to be able to come back and use them as learning opportunities. And therefore, to kick off now, Vernon, let's get into Enterprise Thursday today, where we will be going through business mistakes. But first thing, let's touch our market roundup. Now, on a summary of the markets, we have seen that the FX rate has dropped to 18.93191, which is the lowest since 30th of January. So we are still getting that strong rally of the FX rate, which has pushed all the way to 18.9391, which is down 2.61% from yesterday, 7.25% from 7 days ago, and 6.49% from 30 days. But the dollar is up 4.65% year to date. It's still on a bullish path with a MACD that's saying strong sell and quite over, and it is in the space of oversold. So those of you who are holding on to your dollars, you have taken as the Afrikaners used to say, a bloksem. You've taken a beating, the absolute beating of the century. Unfortunately, those of you, there are people who tend to hold on to these things for dear life. This is the seventh consecutive day of of the dollar selling off. And usually the problem is when the dollar is getting strong, people like rushing in at the end. All share index yesterday had no movement, still at 7922.17. This is all-time high territory. 0.01% up for the week, 9.62% up 30 days, and 7.96% up year to date. We also are seeing the bond index up 0.1% to 1,005.47. In USD, it's up 2.77%. So you can see that the kwacha gains are still reflecting in the bond index, showing that those who are holding them offshore, Zambians who are holding their government bonds abroad. Remember, that's what happens when you see the currency getting strong as a Zambian. Buy bonds. When you see the currency getting weak, buy property. That's how you create your property and bond portfolio for you to retire from if you're a Zambian who's been living abroad for many years and you're still waiting to recover and return. Remember that 95% of Zambians come back to this country regardless of whether you want to or not. I know a lot of Zambians will say, no, we don't. Yes, you do. Lots of 95% of you are keeping your citizenship. You are in a country that is not your own. You are expecting them to just keep you as a visitor. For what? This is the definition, Vernon, of a comfort zone. This happens to a lot of Zambians who live abroad who believe that they're just comfortable in other people's countries without recognizing that at any time, one, the situation can change, two, the politics can change, and three, their hearts can change, and they can also just decide, you know what, maybe I just want to go home. It's actually happening to a lot of Latin Americans, by the way, in America. Younger Latin Americans are saying, maybe let me just go back to Mexico. It's funny enough, after years of Donald Trump saying being called a racist for it, some of them are doing that. So you never know. Anyway, back to this, Vernon. We are seeing that interest rates are still also down. They're slightly coming down, but they're 24.3801%. Year to date, they're still up. So we are seeing some positive movements in our markets towards going to risk on specific. Now let's get deeper into it, as we're seeing that our FX rates, as you can see, there's been a strong nosedive since about 7 days ago, coming down, and you're seeing it also in the rand. The rand is also down 2.84%, down 9.51% on the week, and down 3.29% year to date. This is good for inflation. The inflation risks are starting to come down for this month and next month if we have FX rates like this. Now, it may not reflect in this month's inflation read, but it will probably start to reflect in the May inflation read. That's where you said, remember, because we usually get these reads mid-month. So we'll start to see this data probably reflect in May. One, because remember, food prices are coming down, energy prices are stable at one point, and you're getting inflation now, and you're getting the FX rate pushing negative as well. So this should all culminate into next month, which should show even lower inflation coming in. So this might be a good upside surprise if we can retain the speed at which this is moving. Now, on the trajectory of the FX rate, you are seeing that the curve is getting flatter and flatter. This is our usual 4-month check, and you can see a whole 3-kwacha difference, 3.5 kwacha difference between the top and the bottom at the end. So that shows you how much this path is flattening. This is actually quite good in terms of how the FX rate is moving. So, as we're saying to everyone, it is something to come and prep ourselves for. Now, taking a look at the TRZ bond index, and this is quite important because we actually have a bond auction coming up next in 2 weeks' time. Just a reminder to all the bond investors, start getting yourself prepared. You have a bond auction coming up in the next 2 weeks, exactly in the next 2 weeks on the 26th of April. That's when the next auction is occurred. 2.6 billion kwacha will be on the auction block. We're probably going to see what is going to be refreshed and not. We're still waiting for the BOZ to release that information. But we are seeing that bonds are up 6.98% year to date. In dollars, up 3.27% up year to date. While we're also looking at it as the composite yield, in terms of interest rates, are up 0.74% year to date. That's a big difference from when it was almost up 2% year to date. So you are seeing interest rates reflecting a downward movement. Now, the thing, Vernon, we're not getting about this FX rate is what is behind it. We're not sure what is actually causing such a nosedive. Is it people who have gotten a sniff of an IMF deal and they're deciding to liquidate out their dollars before something wrong happens? Is there a potential for trade has been weak? Trade was very weak, was strong in the first month, but weak in the second month. So we're not sure whether trade is the one thing that's going to start reflecting or whether it was just tax season. So these are the 3 main culprits for what could be pulling this down. People would say it's BOZ selling. BOZ's been selling since last year. They've been selling record levels. BOZ sold over $1 billion into the market, but still that did nothing, especially in the last 3 months. It sold $440 million, which was a record amount into the market, and still it did nothing to reverse sentiment. So I'm not sure whether BOZ has just gotten the magic wand all of a sudden, and all of a sudden it's working from nowhere. Maybe this is an Easter miracle. We shouldn't get away from it. It could be an Easter miracle, but it is tough on the other side of this. Now, finally, looking at the commodity markets, we are seeing that oil still is being pushed up 2.13%. There are slowdowns happening in terms of oil production altogether. While you're seeing 8.964, and one of this is because the U.S. is now getting back in the market to start buying signals, showing that copper is up 89.96, mainly also because all of these are up mainly because of decent inflation data from the USA, while gold is still up 0.07%, up 10.72% in dollars year to date. So we are seeing some positive movements in a lot of the commodities, negatively in oil, but remember the kwacha is still moving positively to work against that. So on the other side, we're also seeing our wealth insurance assets, Bitcoin down 4%, Ethereum down 2.5%, gold down 2.6%. These are all in kwacha, by the way. Okay, these are all in kwacha, showing that gold is up 15.87% year to date, a 66% upwards in terms of Ethereum. If you're looking at the last 4 weeks, look at that. Ethereum down 4.94%, Bitcoin down 1.16%. This is why I always say, people, keep these things under control because they are volatile. When you try and put too much of your portfolio in them, you end up burning yourself. But people don't like listening. They go and do it, and they say, but you told us. No. You listened to one sentence, and then you made a very bad judgment. Then when I tell you to do the right thing, you don't pay attention because it's not exciting. So please listen carefully. As what's his name? President Jacob Gedleyihlekisa Zuma once said, listen properly. Okay, I'm telling you that you should keep about 15% of your portfolio maximum in these things to try and offset. I know people are asking me now, what should we do with our dollars, bitcoins, Ethereum? What should we do with those things? You keep them there as an insurance policy. You're not going to get wealthy off them. It's just that when the broader market is downturning, these ones go upwards. They tend to move in an opposite direction. We'll see whether they stop doing that, but they're a decent disaster hedge at the moment to try and help you navigate these poor moments. So that's what you want to try and use them for. I say it again, use them for that. That is my advice. Whether people listen, that's a different story. Now, across the markets, let's take a look at how things are doing year to date. 7%. When bonds are now up 7%, stocks are up 8%, USD is down 4.7%. Remember, USD was up 17.2% while the stock market was negative. Look at how these two have reversed. Look at that, Vernon. That is the reality of how markets work. This is why I call it wealth insurance. You see now the stock market has picked up, the bond market has started to pick up. You can see that the USDs are starting to slow down and gold is starting to come down. So this is how you stabilize a portfolio through basic diversification. Okay, Bitcoin is up 89% and 67% in terms of Ethereum. That flattens out the trajectory of your portfolio. Now, in terms of some of the news items that did come out yesterday, this is our new news board. Enjoy it. Read them and weep, people. This is what's going to capture most of our attention for today. IMF still projects Zambia to grow at 4% in 2023 and 4.1% in 2024, with an average growth rate from 2024 to 2028 of 4.7%. That's actually good, Vernon. That's double our population growth rate. Almost, which means that we have the probability of reducing poverty if we continuously do that. If we also make sure that the gains go to the bottom of the economy, but it does mean that enough wealth will be circulating through if we also learn to retain that wealth. The IMF has slashed South Africa's growth for 2021 for 2023 from 1.1%, Vernon, to 0.1%. This is shocking. Okay, South Africa is going to get the biggest slash, and is going to be one of the slowest growing economies, at least in Africa. It's the second slowest growing economy for 2023. But however, the African GDP outlook has been trimmed from 3.8% to 3.6%, with DRC being one of the fastest growing in East Africa for the year for 2023. However, Libya is the fastest, 17.5%, and East Africa is actually one of the fastest growing regions with a strong performance. I'll get to that in our topic of discussion. Now, the big story for today has been that our finance minister has said that there is no tangible agreement to be reached between Zambia and its creditors in debt restructuring. This is what he's saying at the spring meetings at the moment, with all that meetings that are going on. On the sidelines of that, the US EAI has raised its Brent crude price forecast by 2.5% for the year 2023 to $85 per barrel and to 81 in the year 2024. So we're going to be bouncing between 85 and 81 for the next 2 years. So if we don't bring down our supply chain costs or bring down our currency drastically from a long way away, we are not going to see oil come back below 20. You can forget about that. I think get used to it the way things are going. The US also plans to start refilling its petroleum reserves if prices get low enough, and Russia has said that its oil prices, which it's selling on the black market effectively, are selling close to about $60 per barrel. Gold has held above 2,000 as the Fed rate pause gathers momentum, but there are risks of gold dropping to $1,700 if the Fed does not cut interest rates. The LME also has said that inventories are sitting at the lowest they've been since 2005 for copper, and Chile has also made laws to cut their work week to 40 hours from 45 hours. That probably increases the cost of labor for mining in Chile, which might be good. It's bullish for copper prices, because therefore the cost of production for Chile goes up. Therefore, the cost of copper will probably go up. That's the world's biggest exporter. But the biggest news coming from the global market is that U.S. annual inflation declined from 6% to 5% thanks to energy and food price declines. However, the main problem is that the things that exclude agriculture, that's called core inflation, rose from 5.2% to 5.6%, meaning that there is still inflation and the Federal Reserve is likely to continue looking aggressively on rate hikes. And Minneapolis Fed Reserve President Neil Kashkari did come out and say interest rates and slowdowns in lending after the collapse of several U.S. banks could trigger a potential recession this year. So there is a recession outlook starting to show this year. The EU has also pointed out that it's also potentially looking at slowing down interest rate hikes as we go along. Finally, for those of you in the crypto craze, the Argentinian securities regulator has approved a Bitcoin futures index, and Bank of America Corporation strategists have suggested that the Bitcoin rally that we're seeing, for Bitcoin to be sitting somewhere around $30,000, is simply because people are taking Bitcoin tokens off exchanges and into private wallets off chain. That pushes the prices up and creates a lot of scarcity. That is called hodling and hoarding. That's what we're probably going to be seeing in terms of cryptocurrency. We'll be talking a bit about cryptocurrency regulations that could be coming soon, especially for Zambia. You want to tune in for that tomorrow. That is the main news. This is our news board, Vernon. Read them and weep. That's how we present it from now on. That's what we call our dashboard. However, mainly from the four horsemen for yesterday, we did see that Indian inflation declined to 5.66%, U.S. core inflation from 5.2 to 5.6%, U.S. 10-year note declined 3.4% after CPI data came out. That's also good news that interest rates are coming out. Canadian Central Bank held its interest rate, and the ECB signals a slowdown. So we are seeing that the potential for global interest rates to start coming down, which could start pulling down even our interest rates, that's also good. U.S. mortgages, in terms of industrial data, shows a decline for the sixth straight week to 6.3%. And Indian industrial production for February rose to 5.6%, while manufacturing also rose to 5.3%. So we're getting strong industry data. We're getting strong interest rate signals. And also yesterday's U.S. inflation rate was helpful to the scenario. So that is what our four horsemen are showing us, that the money markets might start being friendly to Zambia. So watch out for the impacts that may have. But let's get into our deep dive for the day, Vin. And our deep dive discussion has to be from three video clips that we captured from our Minister of Finance as he was being interviewed by Bloomberg yesterday regarding the status of debt. And he had three specific statements, and I just want to play them out as important as they are. One, the first one he talks about, there is no resolution. This is the first thing that up to now we still have not reached, and as early in the morning we still haven't seen whether there's been any resolution, but they are discussions. So here we go.
Progress in getting China to make some acquisitions with regards to debt relief.
The discussions are still ongoing. The level of interaction is intensified in the past few weeks. As of now, we have not had a tangible result in the resolution between Zambia and her creditors, and we are waiting for that very anxiously.
Is there any discussion that the World Bank itself could take on more of the burden in order to meet some of the demands by China?
What we're waiting for is a solution. The format of that solution, as long as it delivers debt sustainability, whether it is by some creditors doing a bit more, whether it is by the multilateral development institutions providing more money. For us, that does not really matter. What we are looking for is the resolution of this problem.
Okay, so I think you could hear how clear our minister was yesterday. I think they were trying to get him in the middle of all that geopolitical jibber jabber. Could China do a bit more? Is it the World Bank to do a bit more? He said, look, it doesn't matter to us how this comes about. What we want is for it to happen. Okay, whether it comes from the left or from the right, we don't care. We just want debt sustainability. So all we're looking for is for you to deliver it. Okay, so that's where he was coming from. As you can see, he was trying to look at it from, okay, is it China? Is there any move for China? And you can see American media is trying to get us into this China bashing game. We're not in the middle of it. I'm sorry to say this. Look, we have had our questions to do with the way Chinese used to back up. I've got a track record of backing authoritarian and corrupt regimes. China has a track record of doing that. However, that's not our fault to battle. Okay, our democratic system managed to deal with that, and many other democratic systems are managing to deal with that. So can we please, these guys are going to continue playing us in their battle when we should use President Manu Gwagwa's simple statement. I'm going to keep quoting him. We are enemies to none and friends to all. That is the way we're going to do business here. Okay, think of us like a shopkeeper. We don't decide who comes in and who goes out. We just sell to whoever who wants. That's how this works. Okay. So whoever we need to do business with, we're going to continue to do business with, because both sides. In fact, trying to stick with only America has landed us in problems. And you can see, due to their social demands, we're not comfortable just getting rid of China overnight. America is a very dodgy country to keep alone with you. You want to have options when you're dealing with the US. Because the moment you don't have options, all of a sudden they start picking through your social laws and making you change things. No, thank you. So we're gonna keep having that conversation. But on the IMF front, it does seem that there is no tangible resolution yet. There was conversations about China potentially looking at letting go of the World Bank, the multilaterals. But for now, it appears our Minister of Finance was picking his words very carefully. And he was trying to say, look, man, it doesn't matter whether this comes from the World Bank. It doesn't matter whether this comes from China. What matters is we get the thing done. And debt sustainability is reached. Now, a second question was raised yesterday, Vernon, regarding the status of the $188 million dispensation of the IMF support package. Take a look at what our minister had to say about that.
The next distribution that Zambia is scheduled to get. Are you concerned at all about the next distribution that Zambia is scheduled to get from the IMF, something like $188 million that distribution won't be met?
Yes, we have concerns. The prerequisite for getting that distribution from the IMF requires two things. Number one, the country must be on course in implementing the program with the IMF. And just last week, the IMF staff team was in Zambia, and they came to the conclusion that Zambia is spot on in terms of implementing the IMF program. The second thing that is required is to have reached memorandum of understanding with creditors, giving financial assurance to be supported by the creditors. As of now, that has not happened, and because of that, there is no automatic reason to believe that the 188 million will be released.
What is the alternative? If that doesn't happen, what sort of plans have you discussed, of course, with Hichilema, the president, with regards to stabilizing their currency and stabilizing the economy in lieu of that payment?
Well, the first thing that we are doing since we arrived here, we are seeing executive directors at the board members of the IMF to appeal to them. Number one, let's work together to make sure that the debt is resolved. Number two, given the possibility that the MOU is not signed, Zambia should not be punished. What would be the point of punishing a country that is performing?
Right.
Okay, so before we get into that, first thing I just want to point out, I've heard many variations of our president's name. I've heard many. Hichilema, Hakalima is a new one. That one is a new one. Hakalima is a new one. I thought he was talking about a guy named Hackle Lyman for a second until he said the president. I was like, oh, okay, that's what he means. That's a new variation of our president's name. You know, if there are three presidents whose names have tortured the Western populations, it's in fact four. But President Ramaphosa, I think they've just settled on Ramaphosa for now. But President Tshisekedi, President Hichilema, and President Mnangagwa, these three names have really been a hindrance to the tongues of Western reporters. But anyway, let's get into the main part of the conversation. He was actually saying that, yes, there is a problem right now, that there are two conditions for that $188 million to be released to Zambia. One is that we had to perform, of which the IMF team did come into Zambia and say Zambia has performed correctly, their budget is to standard, and they did say that they're very impressed, even in trying times, of us having poor copper output and tax revenue that's coming from the mines. So even under that, they've actually been impressed that we managed to balance our budget and manage our budget correctly. Now, the other problem that we're saying that he is saying is, look, we are appealing to the IMF and the other multilateral institutions to say, look, how can you say you want to make this common credit framework a success, and then when Zambia does its part, because the multilaterals are busy debating and arguing amongst each other, we get punished? What message are you sending to the rest of the countries to join the G20 common framework for debt management? In fact, Ben, I don't know what your thoughts are. That's actually a very good argument for him to bring up. To say, look, if you are going to make us the poster child for this thing to work, is it wise to withhold money and make us suffer? Because the rest of them will start saying, why should we join this? If people are going to be like this, China and America are struggling to agree, multilaterals are struggling to agree, then we come into this debt treatment situation, and then we start getting the harsh end like this after a year. Because what they're basically saying is all the reforms we've put in, we've taken oil subsidies away, we've managed to to balance our budget, and then we're getting punished for that while you're supposed to be reaching a resolution. This is supposed to have been the best way to get to debt sustainability, but it's proving to have so many thorns in it that are out of the country's hands, that are leaving people who are highly educated, like our Minister of Finance, who has a doctor in front of his name, and a lot of experience, struggling to just stand there having to appeal to people as opposed to being able to come up with any solutions. And I know, yes, we did borrow ourselves into this. We can't blame the outside world. But for those of them who are then saying that they want Zambia to be the poster child, they got to get up and make sure this works, rather than just standing there always wagging their finger in the air, appealing, urging. Those are the only words we're hearing from the US and the IMF these days. We're appealing, we're urging. In fact, they sound a lot like our politicians, and our people who are always I'm appealing. That's what it sounds like. I don't know if what that means to, or what you're getting from it, Vernon.
Yeah, you see, this really just takes me back to everything we've been saying in the past. What is it that these people are looking for when they come at you and say, we're going to give you more money, or we are ready to restructure your debt as well, and blah, 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 blah. So be careful what we're getting ourselves into. Now, China and America is putting us in between of whatever wrangles they have going on. And like we've always put it out, let's be smart about it. Let's leverage from it, get ourselves, by the time they'll realize that, okay, I think the country where we've been always trying to help out, Zambia, is actually more stable as compared to the time that we're busy trying to push it in a cornered space. So now the time that they're doing whatever they're doing, we continue on the trajectory of focusing on the stability of our economy. Whatever package they want to give us, always scrutinize it before we initially agree or sign any documents with them. Because clearly, I have always tried to be as logical whenever I'm getting into any transaction. What is in for them and what is in for me when I get into any kind of a transaction and any deal. So for Zambia, we should have a detailed conversation of when we're being given money by the IMF or any other creditor or China or America, what is in for them. I know, some want to argue and say, well, they just want to see that Zambia is developed and we're in a better economic state. Every other country in Africa is equally struggling, basically. Actually, we in the news today, we have, stories coming through.
Worse. We're not the worst, my friend. Well, far from inflation is wild in Africa right now. It's really bad. It's 20%. In fact, it's 32% in Egypt right now.
Mm-hmm.
And people are growing at 2%. Trust me, it's wild for other countries. Continue.
And then you see, it's crazy. The firm that actually prints out currency notes for all around the country was actually recording a decline in the expenditure and just income because countries are no longer printing money. That is supposed to tell you something. As a country, we need to build on the trajectory of getting ourselves out of this debt, poverty, depreciation trajectory, and struggling as an economy, and see how we're going to restructure and find ourselves in a better situation. Now, these guys, at this point, they're ready to prove that they're relevant to us and to Africa generally. So now is the time to be smart and be able to squeeze any nutritional value they are able to offer and make ourselves win and out of this situation. Because imagine if by the time they'll be done with the wrangles, we are also financially stable as a country or economically stable. We will no longer be vulnerable. We will no longer be as vulnerable as we are. And so we'll have more of a say, we'll have more authority over things, over trade, employment, our economy, and all these issues of debt. So ideally, it's wise that Dr. Msokotwane came out in that manner, because I'm sure he was able to perceive the situation between China and America. And I think moving forward, that should be the idea, and maintaining the focus of just saying that we are out of the situation, the debt situation. Of course, what is on the ground is possibly perceiving and interpreting that we are likely to be in this situation for a bit longer. But I'm positive if we can continue on the trajectory by looking at every other alternative, every avenue possible to just get us back on track or in a better position. Of course, it will take time to just develop and get ourselves there. But I think maintaining and focusing and seeing every other opportunity and I know, borrowing is good. I personally strongly disagree. If there's going to be borrowing, let's borrow to get ourselves out of debt and remain in a situation where we borrow less. I think those would be my sense about it.
So here is a biblical prescription. Okay, as a Christian nation, maybe let's follow the Bible. Here's the biblical prescription of how to deal with debt, and it comes from the book of 2 Kings 4:1-7. And Elisha instructs the widow, fearing her sons will be taken into slavery for unpaid debt, to 1. Borrow as many jars as you can from your neighbors, then go into your house with your sons, shut the door behind you, pour olive oil into a flask into jars, setting aside one when it is filled. Then sell the olive oil, pay your debts, and you and your sons can live off what is left over. Listen to the prescription very carefully. 1. Identify your currently unused, untradeable resource. The widow had olive oil. That's the first lesson that you start to learn. Okay, what do we have that we can now get? Increase your capacity. Borrow as many empty jars as you can. So the borrowing was for what, Vernon? It was for productive reasons. The widow was instructed to borrow for production, not for consumption. Okay, we have to be very careful to make sure that any IMF money is going towards supporting the productive side of our budget and beefing up our economy. So if we're borrowing, none of it is going towards paying salaries. None of it is going towards paying for regular things. None of it is going to welfare. It should be going to what is going to expand our economy. What economic affairs are going to lead to the expansion of our economy? Could it be farm block development? All sorts of things. Wherever we're getting money for budget support, all of it should be going towards developing the productive side of our economy. Debt is to go to productivity. The other plan is multiply your current resources and productivity. She was pouring olive oil into the flask. So hyper levels of productivity, work and productivity. Trade, she said, sell your things. She said, sell the olive oil. Trade or sell your increased output. Use the proceeds of your increased output to settle your debt, then live within your means going over the rest. That is a biblical prescription, Vernon, for how to handle debt. Okay, that's an actual biblical prescription of how to deal with debt. So perhaps as a Christian nation, that might be the smart thing for us to be doing in the future. But this is not a situation you can put this administration in. They found themselves in this. However, they're the ones who signed up for the job. They knew what was there, and they have to now they take the full responsibility for it. It's not because they caused it. You're not responsible because you caused it. You're responsible because you're the ones who took authority over it. Okay, otherwise, don't take the job. That's the reality. That's like adopting a child and then saying, "Oh no, I didn't know this child had this, and this issue." You took responsibility to adopt that child. That's your choice. Okay, so there was a choice in all of this. So let's just take a look at this. Let's take a look at the final statement. There was a conversation now about the green energy minerals race, and I think our minister managed to sidestep that one quite well. I will say, when it comes to this interview, he actually did it quite well, but I think he did sidestep it quite well. Here we go.
States in your economy because of your copper reserve and some of so there's been a renewed attention by the United States in your economy because of your copper reserve and some of the other materials that we're in competition right now with China in gaining access to. Are production levels going to sort of meet the level that the U.S. and other outside investors are looking for?
Zambia is looking forward to getting investments from all corners of the world, given the quest to have a green economy. We are a major producer of copper, nickel, cobalt, and these are the things that will not only deliver a green economy, but they will create the jobs. We don't want Africans migrating, looking for livelihoods in Europe. We want those livelihoods to be established within Africa. So any investor from anywhere in the world, provided they abide by reasonable standards of doing business, we welcome them.
Okay, so finally he puts it out there. I think they try to get us again. And I think the Americans there played their hand perfectly. They said, look, the real issue here is you have minerals we need in our EV race. Do you have enough to produce? And he's saying, especially for us, the US, and he said, we're in competition for those minerals. You can see that our vice president, our secretary of the treasury, our UN ambassador, all of them came to visit you in the last 6 months. So evidently we're interested in your stuff. Do you have enough? And he said, look, we produce nickel, cobalt, and copper. And he said, look, we work with everyone. And I think he said it. We will work with anyone from anywhere in the world. Okay, he didn't say no just for you. Anywhere in the world, as we like to say. So the reality, he did point out, is one of the things is which we should be actually also talking about, and I'm going to talk about the subtlety of what he said at the end. He said we don't want to see Africans migrating, looking for livelihoods in Europe. Constantly, we see Europeans complaining about African migrants coming into their countries and always looking, whether it's in France, whether it's in Germany, wherever it is, there are complaints about African migrants, and even parts of America constantly saying, look, there are people constantly coming in here looking for work. And what he's trying to say is, well, if you want people to stop coming to your countries to work, because 90% of migration is economic. The reason I can tell you this, Vernon, is because most people skip the next country which is next to them. They skip the closest peaceful country and they go to the most prosperous country they have access to. That's why South Africa takes in the most immigrants in Africa. That's why America takes in 5 million immigrants a year. Anybody migrating to broke countries, Vernon. Okay, the people migrate to where they can make money, right? Wherever there's an opportunity for them to make money, that's where they go. Okay, that's where most migration is, and historically, most migration has to do with economics. So people migrate where they can make money, and I just want to put that in our heads. Now, the key reason I wanted to have this conversation is because if he makes that conversation stick, the Americans are currently always dealing with immigration. Immigration, in fact, one is their worst nightmares. So if we're smart about it, we can tell them, if you want to stop having an immigration problem, invest in people's countries. In fact, Donald Trump was actually saying this. He said, I'm going to block immigrants, but what I want to do is establish trade deals and business deals with these countries so that people don't have to keep coming here looking for jobs. They can have jobs in their countries and we can have a profitable business exchange with them. That actually might be the way to try and pitch this and pitch for investment to the Western world to say, look, maybe this aid thing hasn't worked out because our people are still going there looking for jobs. Perhaps the best option is for our people to be here looking for jobs. While if you provide the capital, we can create the jobs, and then people stay here instead of floating over the ocean or the seas trying to come there. He actually said, we don't want to see Africans risking their lives in the Mediterranean Sea trying to get to Europe so that they can find jobs. Okay, that's something that we need to try to work on. And that was bit for the discussion. I did think he handled that pretty well. And we are going to prep ourselves. But before we get into our break, let's get into a quick conversation about our chart of the day, Vernon. And that was the minister's conversation yesterday on Bloomberg. But our chart of the day comes from a breakdown of the IMF's growth data. And the IMF's growth data is showing us that African nations, Africa is set to grow about Africa as a whole is set to grow about set to grow about 3.8%. As a region, Africa is set to grow about 4.3% over the next 5 years on average, and will go 3.7%. I don't know if that's visible here. I know that this chart may be a little bit stretched, but Africa at the bottom there is set to grow about 4.3%, 3%, while the world is scheduled to grow 3.1%, and this year it's going about 2.8%. You can see that the fastest growing nation in Africa over the next 5 years will be Mozambique, mainly due to the last 5 years. What's interesting for me with these top growing nations, these are GDP growth rates on average. Zambia is ranked 26th of the fastest growing economies in Africa, and 27th this year, and 26th for the next 5 years on average. These are due to IMF projections. The first one will be Mozambique due to a recovery of the economy in the last 2 years, which will be 2027 and 2028. But you are seeing, which is very interesting, Vernon, out of the top 5 economies in Africa, out of the top 6, let me say, 4 of them are East African. DRC, Rwanda, Ethiopia, and Tanzania. In fact, Uganda, the top 7, 5 out of the top 7 are actually East African nations, all averaging 6 to 7% economic growth over the next 5 years. And we're also seeing that out of the top 10, or top 20, 8 of them are East African, because Kenya then gets involved somewhere at number 16. You've got Burundi there at number 12. So these are markets we should be doing business with. We should actually keep opening ourselves. Libya is expected to be the fastest growing economy next year in terms of recovering from the previous economic wrangles that they're having. Now, what I am concerned with, Vernon, is the bottom four economies, the four slowest economies are 4 of the 10 slowest economies are coming from Southern Africa, with the second slowest being South Africa, only growing at 1.5% on average over the next 5 years, with 0.1% this year. So the question we should be asking ourselves in this chart, before we get into our topic of discussion after the break, the question we should be asking ourselves, Brendan, is should Zambia be aligning itself with Southern Africa, or should we be aligning ourselves with East Africa? I've constantly said Southern Africa is proving to be a waste of time. They don't want to integrate. They don't want to integrate currencies. They're not interested in trading fairly. Okay, and I'm being honest with you. South Africa has never been interested in trading fairly. They talk a big game, but they never do what they're supposed to do. But East Africa is actually forming a community. They're creating one passport. They're creating one currency. And DRC recently signed up to join East Africa. And in fact, part of the UN already recognizes Zambia and all of parts of East as part of East Africa. So maybe the question we should be asking is, should we be Southern Africans or should we be East Africans? Seeing that East Africa is going to be the fastest growing sector of Africa, making up five out of the top 7 growing economies over the next 5 years, perhaps it's time for Zambia to consider the switch. Anyway, our topic for discussion on the other side will be learning from mistakes. You give me your thoughts on that on the other side, Vernon, when we come back from our break.
And we will be back at it on that note. Your question.
So the question I was saying is, what are your thoughts? Should we be East Africans? And give us your comments to all those who are watching. Should Zambia, given that East Africa is going to be the fastest growing sector of the African economy, with the majority of its nations performing in the top parts of the fastest growing sectors of the economy, just like it's been for the past 10 years, and it's forming into one place, they're going to have open borders, open trade, everything. Should Zambia be East Africans, or should we be Southern Africans, who are proving to be the slowest part of the economy, held down by South Africa and their friends? Which should we pick? Should we pick East Africa? Or should we pick? I mean, we are recognized by the UN as East Africans, but yet we choose to be part of SADC. I know that we can hold on to both, but should we be talking about considering joining the East Africa community? What are your thoughts?
We will do business with anyone and everyone around the world to begin with. So, where the economic is looking, we will stretch on that direction, because that's where, of course, things are looking well. And to stabilize, I mean, some of the common sayings would be that you rub shoulders with those people who are doing better than you, to come and all the way up. And if those are the countries, of course, that are doing well just next to us, or just still around the region, we'll be more than happy, I'm sure, to work with them and just have any ties and any trade activities and whatnot. Unlike going to other countries where, of course, it's just getting there, of course, is a cost in itself, and trying to build our economy, I think it would be rather be prudent if we can work with other African countries. And to begin with, we are in the very region, and if there would be any other country someone would ask me to go and stay apart from Zambia, it will still be in Africa, an African country. That's how much I love Africa. And the endowment behind it, the riches. I know definitely I can have everything and nothing in Africa due to the natural resources that we have. And I think we'll be safer if we can make ties with the Eastern soon as we can, so that as the time then things looking bad, we have already started talks and whatnot, to be safe.
we're already trading a lot that direction. There's a lot of trade deals coming in that direction. But there's a reason, Vernon, I spend 5 to 10 minutes every night learning Swahili. There's a reason. Okay, because I know what's going to happen, and I'm just getting myself ready. So, meaning in Zambia, but I'm learning Swahili very quickly. So, next to and we have got one comment there from Chinsoka Musona, who has said, it is best for Zambia to join East Africa. Yeah, anyone else who's watching today, give us your thoughts. Should Zambia join the East Africa community, or should we stay strictly aligned to SADC and just only trade with East Africa? Give us your thoughts. Is the big whoop about being friends with South Africa worth it anymore, or is it time to find new friends? Because it appears our friend is not growing anymore, and they're used to us being small. I'm just putting that out there. Let's move forward to our main conversation on mistakes. So here, Vernon, are 3 mistakes that startups tend to make when people are starting businesses. So if you're an entrepreneur, you want to really tune into this as we get into this quick conversation, Vernon, about mistakes. Here are 3 common mistakes that startups make. One is what we call a solution looking for a problem. Sometimes you stumble upon very cool technology and you like to say, wow, I wonder which market this is useful for. That is mistake number 1 that a lot of entrepreneurs make, simply because you didn't start with a problem. So the advice is, first, fall in love with a problem and see if you're a fit. Have you got founder market fit, and have you fallen in love with the problem? And then let the solution naturally develop from your passion for the problem. Okay, have a passion for a problem, not a technology. And this often leads to people creating businesses that eventually people will say, cool, that's nice technology, but we were okay with the way things were working anyway. This wasn't needed. So you often find that you have to market a lot. You often find that you have a lot of startup costs, customer education, convincing, that becomes difficult. But if the problem is compelling, you often find people come to it. The tar pit problem is a problem where many people, Vernon, have tried to solve it. You think, this must be easy. Then when you get in there and try and solve that problem, you end up realizing it's harder than you thought. Maybe the customers have got resistance to change. Maybe there's a social factor as to why that problem exists, and people have become very accustomed to it. Someone came to Zambia once trying to sell microwaved nshima. It seemed like a logical solution. I know that you've got a confused look on your face, Vernon, but they were thinking people probably wanted to cook nshima faster. So they came with a solution to create microwave nshima, and what they didn't recognize is there was a cultural reason people cooked nshima that they do. Maybe now, Vernon, you may find that the cultural solution might have changed because a lot more women are working professional jobs. They've got families, and a lot of them are single mothers. So some of them may consider it. But remember, if you don't cook nshima the old school traditional way, and your mother-in-law comes to visit or an elder comes to visit, I remember, by the way, I have cooked nshima in a microwave before, and it actually has worked. There's an actual way. But I remember the person who was eating it like just poking their tongue at it, concerned if this thing was poisonous. That's how it was working. Actually, for a season, I didn't have a stove, and they actually cooked nshima in the microwave consistently for a while. It was an interesting thing, and it actually worked. Okay. It was an experiment that worked, but somebody did try that. And number 3, over or underthinking. These are common mistakes. Some people come up with the first idea and say, right, I'm going to be an entrepreneur. Here's the first idea I come up with. And then they get burnt because they haven't done enough, or they overthink it and they never really come out with the product. They're constantly analyzing, overthinking it, overcooking it. And usually when people are starting businesses, these are the 3 ideation mistakes. Watch out for them, learn from them, and maneuver through them. But one of the big things I want to talk about today is someone called Chunka Mui, who has actually been one of the premier advisors in startup science and business science. He had a book called Killer Apps and another one called $1 Billion Lessons, where he studied 750 $500 million plus business failures. Okay, 750 of them, to try and see what were the common trends. Here are 3 things he looks at that distinguish failure and success. Successful businesses think big, start small, and learn fast. Okay, so they've got a big vision that they want to achieve. Then they start somewhere tiny. If you read 0 to 1, that's how you do it. And then you learn fast. You pick up speed very quickly, and you learn from mistakes. So you have to be quick about how to pick up mistakes. You need quick feedback mechanisms and constantly building that into your solutions. Failing businesses think small. They start very big. They build too much infrastructure and they start very big, and they learn slow. So that is another business difference that you actually have to see. Unfortunately, Vern and I have gone into the dark a bit because Zesco, the Dark Knight, has decided to visit us in the middle of trying to do this. Well done, Zesco. Well done.
Wow.
Well done. Now, we thought load shedding was over, didn't we? But anyway, let's continue moving here. The other part, the next thing he did, I want to just quickly go through this, is the 7 business failures, 7 patterns of common business failures. This is the book I was talking about, $1 Billion Lessons. You want to learn from failures, people. One of the reasons why a lot of people get hit badly is they're inspired by success, but they're not educated by failure. So what you want to try and do is educate yourself with these 7 patterns: the illusion of synergy, financial engineering, deflated roll-ups. So I'm going to go through each of these quickly over the next couple of minutes. Number 1 being the illusion of synergies. The example here is AOL and Time Warner's merger, and Quaker trying to buy Snapple. In an attempt to increase product offerings to their already existing customers, companies try to now work with complementary companies, people who have skills and resources that they think can help meet their consumer needs. Often what happens is that they don't assess strategic incompatibilities like culture, skills, and priorities. They have unrealistic expectations of the union. It becomes an expensive process, and the customer doesn't care whether you're united or it's one of you serving them. What they care about is how better the product is, and that's what people don't think about. So where you want to try and fix this is, will the expense be eliminated or transferred to a different department? Ask yourself that question. Will you make sacrifices that will mitigate merger difficulties? We've seen 4 banks effectively merging into one. Are they taking these into consideration as they're doing this? Have you factored in middle management resistance to change? Because that's usually what happens. And have you factored in the margin for error? You know, these things tend to fail a lot. Mergers have got huge failure rates. Simply because people don't look at the unseen issues. We're both profitable. You've got a network. It works. It's the same as marriages, by the way. People think, oh, you're good. I'm good. You're rich. She's pretty. He's rich. This, that. Let's put it together. Then you realize you've got cultural differences. Okay, and maybe you're not such a perfect fit because you looked at the outside and not the inside. So that's what we call the illusion of synergy that often leads to billion-dollar losses. The second one is called financial engineering. The example they gave was a company called Greetree Financials, who gave out 30-year mortgages on trailer homes, which could only last 10 years. And they tried to engineer their finances to say they were making profits from selling the trailers instead of people repaying the mortgages. And therefore, that ended up creating a problem. So it's an almost addictive activity of creating financial mechanisms to manipulate your finances or to try and create accounting methods, creative accounting. So you overlook simple mathematical errors that get exposed with scale. You're vulnerable to market risks. You weaken your business model because it depends on these financial engineering methods. You can actually end up becoming short-sighted, and then you end up getting unwanted scrutiny from regulators. So the question is, will this actually result in cash flow? If the financial engineering does not result in cash flow, forget about it. Are you ready to deal with the regulatory scrutiny that comes with this kind of creative accounting or financial engineering? And will you create a feedback loop where you have to engineer a solution to fix a problem you've just created, and it's like a lie on top of a lie on top of a lie? It's called a pack of cards. The third one is what we call deflated roll-ups. You roll up a lot of small businesses to become one business, hoping that you'll have lower capital costs and lower advertising costs. What ends up happening, the costs become bigger than the gains. You have cultural clashes again because these businesses are incompatible. This is like a person this is like Nguzu in Mbali. Every new wife becomes a new problem to his life. So this is a polygamist trying to get new wives now. The scale fails to produce any economies as expected. People tend to do this too fast. They fail to deliver tangible results, and they fail to consider contingencies. So what systems might break down if you create diseconomies? How much will this integration cost you? What percentage of new acquisitions might this create? What percentage of new acquisitions might create problems like fraud? Because people tend to hide fraud in companies that are being acquired. And how much financial loss are you willing to withstand? I'll go through one more of these. Staying the misguided course. There are 3 more. You want to check it out. I'll post it up on my page. But staying the misguided course. Kodak, as early as 1981, saw the threat of digital photography and did nothing. Pager mobiles, remember those pagers people used to have on their hips? They did nothing to see the cell phone coming. Just like the Titanic captain, many of these leaders underestimate the scale and the scope of a visible threat coming ahead of them, and they opt to stay their current course. Their assumption is that the current conditions will stay. The current margins are higher than the threat, than adopting the new threat, and they have a failure to adjust their business models to social and technological trends. So the first thing you want to do is continuously scan the market for threats to your business model. Assess the 5 forces regularly, and if you are you a market that's disruptable? And if you are in decline, consider just selling your business instead of trying to stay the course. So there are 3 more, and we'll leave those be. And there are what we call 9 ways to test your business. So he does in the book put 9 ways to test your business, to stress test your business decisions or your strategic decisions to ensure that you're not being one-sided. He also does point out some issues that lead to businesses not being able to do this. So this is actually a quite important text to help you understand how businesses fail, okay, and what you can learn from them. So it's good to learn from your own mistakes, but it's also very wise, Vernon, to learn from other people's mistakes before they follow you. Okay. But he does come up with one single quote, and I heard this in his speech. Chunkamui did say, in the writing business, we tend to focus on success, and there's a lot to be learned from success. One thing we tend not to do is to look at failures. While success is inspirational, it's failure that's education. And that is something, if you're in the entrepreneurship game, sit down and look at some of these failures that he had pointed out. You may want to think very carefully about the steps you are taking in your business. That, Vernon, is our week on learning from failure. And we are getting some people who are talking about joining East Africa. Thank you very much to everyone. Vernon, give us your final thoughts before we run off, my brother.
It's as easy as being able, and your next step, not where you want to go. Understanding that you need to get from level 1 to 2, and 2 to the next level. Unlike trying to jump all the way. I think that's where the misconception comes in. You have the right energy channeled differently at a wrong time. So understanding that you are building and you're not there yet. And that's why there are some activities, in the business world that cannot be undertaken by someone who's starting up, but someone who's already been there, who's stable, who has big monies and whatnot. And like that, you end up putting your money wrongly. You invest in the wrong things, early diversification, and you find that as you're starting up, you make so many mistakes that you shouldn't even have been making, but because you are too excited, maybe you got a bit too overwhelmed by whoever is inspiring you and whatnot, you tend to even make losses because you invested your money in a wrong place or in the wrong type of business. And hence, it is okay to learn from the mistakes, go back to the drawing book, understand where you are, where you need to go, and use the same energy, use the same inspiration, use the same motivation as a stimulus to get you from 0 to 1. As I'm also reading 0 to 1, very essential, by the way. And that way you build your way towards the top or to the top, and not trying to get from 0 to 50 to 100. That way you are guaranteed to be failing soon.
Exactly. So to everyone, I wish you all a wonderful day. We are working on Zambians adopting the growth mindset. And I will put that question out. Should Zambia join East Africa, or should we stay with SADC, who seems to be struggling? All right, guys. Vernon, have a wonderful day, my brother.
Thank you. Do have a good one.
Yes.